hello, Maverick Currency traders. Welcome to the last. Oh, wait, no, this is not the last currency room of the year. This is the second last. We'll do another one next weekend. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. Let's jump into it. In this session, we're going to talk about the news of the week. Huge news for central banks. Lots and lots of movement. We're going to look at all the charts, score them from +3 to -3. And then, as we always do, we take the strongest pitted against the weakest, and those are our target trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's get ready for next week.
All right, let's start off with some news here. We had a sell-off, and the sell-off started on Wednesday, and it was a huge sell-off. We saw 4% drops in the market on the Fed market news, on the Fed meeting news. They cut rates as expected by 25 basis points. But instead of 4 interest rates projected for 2025, they cut that to 2. The market did not like that, and it tumbled hard. So we saw the dollar shoot higher. We saw yield shoot higher. This was a surprise to the markets. I don't know how it was a surprise to the markets. I've been calling for it. I watch a ton of CNBC throughout the day. Tons of people have been calling for this exact thing, but yet the market seemed like it was surprised. So we got all those big moves. Other than the FOMC meeting, we had 2 other central banks. That made 3 central banks this week. And remember, last week we had 4 central banks. So just a ton of activity. And that activity has been leading to really good volatility in the markets. Let's start off with the news of last week. European PMIs, they came out very mixed. Look at that. The manufacturing number missed. The services number beat. Now, that's actually more bullish than bearish because the services PMI is 2/3 the size of the manufacturing PMI. So again, I'm going to call this mildly bullish for the Eurozone. Then we got the employment report out of the UK, much stronger than expected. So again, the pound has been one of the stronger currencies, and we do like the pound going into this week. We liked it last week. Canadian CPI. The headline number missed, but the core number beat a little bit. So again, very mixed. And then look at U.S. retail sales, mixed as well. Headline number the headline number beat, the core number missed. Everything in the first of the week was very mixed. And so we didn't see a lot of great price action the first 2 days. But then we got into the good stuff. We already talked about the Fed meeting, but let's take a look at some of the others. So Kiwi GDP, this was a huge surprise. New Zealand GDP was supposed to contract by 0.2%. It contracted by a full percent, and last quarter was revised from a plus to a negative. So that's 2 consecutive negative GDP. I know that's not the textbook definition of a recession, but it's one of those very easy things that we can say, oh, their economy's in recession. The Kiwi has been one of the weakest currencies lately, and this is why their economy is not doing well. Then we heard from the Bank of Japan. The Bank of Japan came out and basically were more dovish than the market thought, and so the yen spiked after the Fed meeting on a risk-off move. The BOJ come out and it spiked down, and then we got a risk-off move Thursday night, Friday morning, and it spiked up. And then we got a rally on Friday, and then it spiked down. So look, the yen here is absolutely neurotic. We're going to take a look at it. I think you could flip a coin and probably trade yen better than using any sort of technical analysis at this point. We then heard from the Bank of England. Bank of England did not cut rate as expected, but what the surprise was, one more member went over to the, hey, I think we should cut rate side. So this was a little dovish. The pound sold off on it, but then it rallied back. It rallied back up. So we'll take a look at the pound, but it remains one of our favorite currencies. U.S. third quarter GDP was revised higher. So this is the final GDP. This is the number that goes in the books. Again, the US economy is doing much better than the rest of the world, and it remains doing much better. We got some disappointing retail sales out of the UK and Canada, but again, didn't really move much. And then the last one I want to talk about is this core PCE price index. Remember, the Fed came out and said inflation's a little hotter than we expected, so it's no more 4 rate cuts next year, it's 2 rate cuts. And then 2 days later, this is their favorite inflation indicator, and it missed 0.1%. Now, if you do 0.1% times 12, that's a 1.2% yearly reading. That's way too low. That's below where the Fed wants to be. Now, look, this is just one report, so let's not get too carried away. But this really calmed the markets down. Anyone who was worried that the Fed was going to maybe even take away those 2 rate cuts, this really soothed the market on Fridays. So let's take a look at what that all meant by the end of the week, because this week was neurotic trading for sure. Absolutely big moves, ups and downs throughout the week. In the end, the S&P 500 lost 1.8%. On Wednesday, it went down like 3.5%. We gapped down on Friday morning and had a nice rally to bring some of that back. World equities were down 3%. Crypto got hit. We'll take a look at all of these charts here. Gold, oil went down. So again, everything went down, but let's talk about where it went down to. Here's the S&P. And through uptrends, you get many times where you get a pierce. Now this time we didn't really pierce the 50 MA, we held it. But the one before this, if you take a look back on the chart, it actually pierced and was down below the 50 MA for about 2 or 3 days. And then it popped back up. Take a look at this price action. We definitely got a pierce. We definitely went below this 50. Now this 50-day moving average at Maverick this is our line in the sand. If it's above a rising 50 MA, we are leaning to risk on bullish trades. If it's below, we're leaning to risk off bearish trades. There are pierces all the time of these moving averages. So what we really need to see, we don't know yet at this point if it's a downtrend. What we need to see is a break, a bounce that fails, and then a new low. So really, if you are really strict on your technicals, which I am, right here, right now, I'm looking at where we are thinking, I don't know. I frankly don't know. The technicals are telling me, hey, you don't want to be bullish anymore. That's what it's telling me. But it's not telling me to be bearish yet. I don't know what it's telling me. I need to wait for some confirmation. If we come down here, we bounce, and then we fail, and we close below this 50-30, 58-30 on the S&P, that is a clear sign that the technicals are bearish, and then we will shift to a much more bearish stance in all of our initial trades. If this comes up, runs up, pulls back, breaks higher, guess what? This was simply a pierce. This is simply a short-term pierce, and that's it, and this bull market is intact. Which one is it at this point? I don't know. And guess what? Nobody knows. I can give you my opinion, which I'm going to give you right now, but I want you to understand that my opinion is simply that. The one thing I've learned throughout my almost 30 years as a trader, if the economy is strong, the stock market tends to go up. Period. I know that's not very technical, but that's what I know. The economy is still strong. Yes, there's problems. Yes, there's maybe a government shutdown coming. Yes, there's maybe tariffs coming. I get all that. But right here, right now, the economy's strong. I think this was simply a pierce. I'm not saying we go back to new all-time highs in the next week or so, but I think we're going to look back on this. It was a pierce, and it wasn't a major trend change to a bear market. Ankit, what's your call on this market?
Hey, Rob, I'm definitely on the same boat as you. We definitely were surprised with that market price action, and it really, caught a lot of people off guard. So again, this is where, one or two things can happen. Either we see the market sentiment shifts and we start to see a bit of a pullback, or, like many times we see throughout the year, the market panics And then once it settles down, the buyers come in and they buy it. So I think, as you said, markets are pretty strong. We saw the same sort of hawkish sentiment from the Fed as well. So I think that's what really caught people off guard. That hey, if we are so strong, why markets are falling? So I think this is a good wait and see approach. We are all. This also happened at this interesting time of the year where we are almost getting into the holidays, and we tend to see that Santa Claus route, which it happens always towards the end of the year. So that's where again people come in. They want to buy more. People want to be invested. Funds wants to be put money to work. So I think here we are where there's a better chance that markets sort of try to make a recovery, and we could totally see that in the next couple of weeks during this holiday period. So I think I want to don't want to jump the gun here, but I think as we transition from 2024 to 2025, perhaps we probably see some things come to forefront in 2025. But I think the next week or two, we'll probably see market consolidate or go higher from here or go sideways. But I'm in the same boat. I think it's tough to sort of jump the gun here and wait and see approach. I think probably the best.
Thanks, Ankit. The good news here is that typically, if you go back to like last year or the year before that, and you listen to what mine and Ankit's advice was, at the end of the year, it's like, hey, you know what? Volume and volatility are low. Go enjoy your holidays. Let's not click many buttons. Let's just close out this year. This volatility happening at this moment is changing the game for this last week of the year. It's likely going to be a pretty decent trading week when it usually isn't. So that is the good news, is that you don't get to hear from us saying, hey, take the rest of the week off, don't click buttons, it's going to be dead. That is not the case here. We are likely to get some big movements here over the next week. Here's how Forex closed out for the week. We saw the dollar, strongest currency, followed by the Swiss franc. But take a look at the Euro block. The Euro block was bullish across the board. You're going to see when we look at charts, we like this Euro block on the long side. This yen, based on any day that you took a screenshot of this or a snapshot, this could have been up a percent, down a percent. As I said, the yen is a coin toss at best. And then take a look at this block, the growth currencies. They were weak, with the Kiwi being the weakest. So that's what's been happening for the last 3 weeks. And we've been saying, stick with this, stick with this, stick with the dollar and euro block long against the Aussie Kiwi short. That's been the trade. The big question is that going to reverse this week? We'll get to that here in just a second. Crypto's had a big sell-off across the board. Big sell-off, and you can see big losses here. But these have come after exponential gains to the upside. So not a surprise here. We'll let these things settle out. We'll look at their bounces. And if they're decent bounces, we could potentially take a look at some longs. But that is not early this week. This is definitely a wait and see on these pullbacks. Let's go into these markets. Let's take a look at all the charts. Let's score everything. And that's going to give us a good idea of what we're hunting this week. We already looked at equity markets. Let's look at the bond markets. This is a 10-year U.S. government bond, and you can see we broke through a pretty significant level to the upside. We're now trading above 4.5, and I think this is going to be pretty tough to go back down below. I think there's going to be a pretty good floor here. But that being said, you're going to hear Ankit and I talk about this candle. This is just on the bond market, but we're going to take a look at the dollar because the dollar is giving us the same candle. We saw this was 100% because the Fed said that they were going to be less likely to give rate cuts. And the market said, holy cow, this is crazy. Inflation's maybe way stronger than we think. And then we got the PCE number where it said, oh no, maybe it's not that bad. I do think that this move is likely to be given back. Maybe not all the way, but I do think we're going to see this fall back. What happens after that, we'll have to wait and see. But I actually like the dollar short this week and bonds short. I don't think it's going to be a huge pullback. I'm not calling for a trend change, but that's just where it is right now. Here is the crypto basket, and you can see, and we're going to take a look at Bitcoin because Bitcoin's been the only one I've been interested in. The basket itself failed to make a new high, and then we went down to make a new low. So at this point, The best we can hope for is that this is an ABC correction. Again, if you are a Elliott wave theorist, then you know what I'm talking about, is that, okay, whenever you have a big move higher, you get these ABC corrections. So this would be labeled A, this would be a B, and this will be a C. All right. And the saying is, okay, when you get these huge expansive moves, so again, let's label this 1, 2, 3, 4, 5, five-wave pattern. And again, this is not a perfect Elliott wave. Usually the 3 wave is the biggest wave. You get the ABC correction. What it says is, theoretically, if this is just a correction, you will get a new 5-wave pattern that starts at this point. Do we know that that's going to happen? No. A lot of times these ABC corrections turn into 5-wave patterns down, and sometimes they turn into even worse. So I'm not a huge believer in Elliott wave theory, but I like the idea of looking at these things in these waves. That's why I say, look, if this bounce looks decent, we can get back on the bullish side in cryptos, but it's really not until it breaks above this upper trend line. And we'll take a look at that on some of the cryptos. If it breaks above this upper trend line, I will be a buyer, but until then, absolutely not. I am on the sideline in cryptos. Next week, there's really no news here. Canadian GDP, that's about it. So you can just go ahead and not even worry about news because we have a holiday shortened week. Equity traders get, I think, about 10 days off every year. Forex traders get 2 days off every year, and this is one of the weeks, Christmas and New Year's. So in the Forex market, but let's talk about equities first. The equity market's going to close in the US on Tuesday. It's going to close early at 1 p.m. So equities close at 1 p.m. Forex will stay open until 5 p.m. Obviously, when the equity markets close, you're going to see the Forex volume dry up as well. So I don't think there should be anyone trading after 1 p.m. on Tuesday at all. And then the markets are actually going to close. There will be no banks open until the banks in New Zealand open up on the 26th, which is going to be right around 5:15 Eastern time on Christmas Day here in the US and Canada. So that's where the market's going to be closed. So if you are sitting here on Christmas, it will be open. The Forex market will open up at night on Christmas. Does that mean you should be trading it when no other central banks are open, when everyone else is celebrating Christmas? No. The volume is going to be anemic. The spreads are going to be very wide. Any breakout is likely to fail. So look, you should take off all the way until the US session opens on Thursday. So really, you got Sunday, Monday, half day Tuesday, and then you got Thursday and Friday. Those are really only the trading days this week. Let's go in on all the currencies, score them from +3 to -3, and that'll give us our targets. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? All right, looking at crypto. Bitcoin is by far the best looking one here. And you can see that we did break out, but the breakout wasn't that strong, about 4%. And then we had a 15% pullback. So this is a 15% pullback. That's a pretty substantial pullback. And it wasn't even an ABC correction. You can see that this one is just a pullback, and we did find support and bounce at our 50-day moving average. Okay, so this is where I said, I gotta see what this bounce is like. I gotta see what this bounce is like because we broke through a lot of technical levels. There should have been some support all on these levels, and it just plunged right through it. For me, I'm saying, hey, look, I need to wait and see more. So for me, I am on a wait and hold on cryptos. Definitely not looking at this next week. I'll come back at the first of the year and take a look and see how the charts look. Coming over here to Bitcoin Cash, totally disinterested. We plunged, we based, and we didn't even have a bounce. That's a clear sign. You don't even get a bounce? No thanks. Not interested. Moving on to the next one. Same thing with Ethereum. At least this one had a bounce. Did not make new highs, but then we broke through the support. So there's been technical damage done. We have to wait until a new uptrend has formed, higher highs and higher lows, before we really can get interested in the cryptos whatsoever. And you can see Litecoin, ABC, maybe ABC correction. If that's the case, then really you're looking for it to break out above that line. I even like to get a pullback to that line to really cement that the trend change has occurred. Looking at cryptos, not interested. This whole week, I will come back at the first of the year and take a look at them again. Ankit, take us through the Forex, please.
Absolutely. Well, let's just start with the US dollar. Again, I think for the last few weeks, we just kind of had a +2, +3 on trend, and we also had like velocity being +2, +2 on trend on the velocity side as well. But again, now this is the first time that we are noticing a bit of a change as far as velocity -2 and trend is +3. So as like Rob said, this could be a counter trend trade. But again, I think the way we are finishing off, usually that's what we get. If you look at the dollar, we've been kind of moving up in that direction, and then we get this big candle to the upside. Now, is that a bit of a blow off top, and then we started to revert, or is this just a small short-term pause? I think right now, based on where the market expectations are, I think dollar is already into this 3-month run. I think we started this run at the end of September, so October, November, and now December. So a lot of that, I think was priced in. I think that the dollar might just come back and start to, go back into a certain range that it was going to trade in. But again, I think that parabolic move in this dollar, I think, might be coming to a bit of a halt here. We are back at 2022 highs, and remember, 2022 highs was exactly when we saw a lot of inflation issues, and the U.S. was raising interest rates. So the fact that we have already come up this high is kind of surprising to me. But I think in the next foreseeable future, we'll probably see a bit of a coming down into a range. So not expecting more newer highs every day. Maybe we sort of go back and forth, and trade in a range here. So that's where we are with the dollar. Again, not everybody wants to trade something that has a +3 trading score, but I think that could be worth taking a look at. It's a bit of a trade that's probably gonna go sideways or maybe pull back a little bit in the short term.
Hey, Ankit, can I talk a little bit about the dollar here? I actually like the dollar short here. And look, I started in trading as I'm the ultimate pessimist contrarian. If something was up, I wanted to short it. If something was down, I wanted to buy it. I was the counter trend trade guy. You could have put me on a poster, be like, don't be like this guy. And it had to be beat out of me by the market to teach me, do not go counter trend. Do not. So you will rarely hear me come on here and talk about a counter trend trade. But during a year, there's going to be 1 or 2 times where I think there's a really good opportunity to make a counter trend trade. And this is one of them. What we typically get at the end of a bull market, it's very, very typical that you're going to get an expanded range candle. So again, and it's this parabolic move where, let's say you have this long uptrend, usually you get this blow off top where it goes parabolic. The Friday PCE news, a 0.1% lower than expected, means to me, in the minimum, we need to lose the Wednesday and Thursday move. I'm not saying that the dollar is done, even though after a parabolic move like this, you usually do get a downtrend. But I do think short term, a pullback to Wednesday's low, I think that is a pretty good bet. I'm not saying I know what's going to happen in a month from now. All I'm saying is at this moment, with the big expanded range candle, parabolic move at the end of a very long trend, to me, I am going to be taking a counter trend move on dollar, even though it is, again, not my traditional trade. So I just want to share my thoughts with everyone before we jump into the rest of the currencies.
Oh, absolutely. Thanks for sharing that, Rob. And yeah, definitely, like you said, there are always moments. There are always moments in certain times in markets and currencies where it's worth a shot, and I think that's what it is. Now, this is what it's not worth a shot. It's the Japanese yen. This is a bit of a rolling the dice and hoping for the best. Again, if you look at it, the yen has been rising, and it's kind of comes off a little bit here, but we are not at the lower lows there, but we definitely had a big candle down off of the Bank of Japan press conference. Not off the race statement. The race statement was fine, but then during the press conference where we saw that biggest move. So, and here we are sort of having an inside candle today. So, where do we think it's going to go in the next couple of weeks? I think you can see the trend score is zero and the velocity is almost like a zero now. So, this is where it could go up one day and go down one day. It's just not really have that consistent, score that we get in a +2 and a +3 environment. So, really don't have a strong call on the yen here. I think markets were anticipating or they were gearing up for maybe a bit more hawkish Mega Japan, and that's not what we got. So I think in the next 2 weeks, I'd rather take a shot at the dollar here than the yen. Now, if we go into the European currency block, like Rob said, they definitely look good. I mean, take a look at Swiss franc, and this is the one that I want to be, looking at this interestingly as we are above that resistance level. So this is the range. If you look at the Swiss franc range, we've been in this range for most part of this year. If you go back, I mean, we got this range established back in August and been trading in that range since then. Now we are actually going to be closing above that level, but is that a breakout or is that going to fall back into the range? So I think Swiss franc looks interesting to me for the next 2 weeks as it's in testing the level. But if we compare that Swiss franc to euro, and if you take a look at that, I mean, I know euro is looking stronger as well. So again, we had some periods during the year where there was a big divergence between euro and Swiss franc, and right now they kind of be the same here. So euro definitely looks like it wants to rally higher. Its small bases are a good sort of time to get in, and I think that's what we are seeing here. I think there's a little bit more of a better chance for the euro to actually outperform here. Now, if you go into the pound, again, pound is the one that has been actually outperforming compared to the euro. But if you look at this one, we are right against that resistance on the daily chart. And we got this little whipsaw move on Thursday with the Bank of England press conference and the rate statements. So right now, I think until it really breaks the high of that, I think I'd rather go with the euro. I know we're getting an inside candle today, but again, we talk about how rotations happen, and maybe euro is gonna be more in the lead than the pound. So I think at this point, although pound looks good, I think euro is worth a shot here. But overall, I think it's not telling us to go short the pound here. I think it's just telling us, what's likely to lead. So pay attention to the euro pound currency pair to make sure that we're on the right side of that trade. Now, if we go into the growth currencies block, CAD is a bit of an outlier because CAD has not really done much, gone anywhere, and that's just between a 0 to a +1. It's just not a whole lot of trend there. We did notice that how it decoupled from the US dollar, where the dollar CAD dollar is like at the levels that we haven't seen like since 2020 and then going back to 2015. So very interesting sort of a divergence over there. So the way that we see the short term, I think CAD is still doesn't have much of his own strength. I mean, a couple of days up, couple of days down. So that's just where we are. If you're trading the velocity shorter term, great, but it's not something that's following a good trend. But if you're looking for those trends, I think Aussie and Kiwi were more better aligned with that score. You can see that they're -3, and they've been -3 for the last 4 weeks. And we'll be talking about how those are the right currencies to be short. But I mean, now in the shorter term, you can see that if the dollar does back off, we talk about how we sort of come back to more of a variation where things are extended too far out. I think if you look at that sort of a horizon where you're seeing the dollar being at real high, and then we're seeing the Aussie and Kiwi at real low. Now, if that's a pendulum shifts, I think we can see the bottom one sort of rise a little bit as well. And I think that's where the Aussie and Kiwi stands. The trend score, it's a clear -3 in both. Now, in the shorter term, I think maybe if that's where we're going to see a swing on the other side, we could see this sort of having a relief rally. And I think that's really where you want to be looking at. Again, these are ones that are the most extended. But again, in those extensions, we can have some relief rallies as well. So I think if the premise, as Rob discussed about the dollar, I think even though the Aussie and Kiwi are at a -3, I think that's where I think would be a bit of a balance coming in as well. Now, if you go with the European bloc, I think that's the one that is consistent. But if you're looking for the best performance, I think those beaten down ones could have a bit of a balance in the next couple of weeks as well.
Ankit, I totally agree with you on Aussie Kiwi. I've been pounding the table the last month. Like, hey, this is the trade. This is the trade. Long dollar, long euro, even long yen at times, short Aussie Kiwi. If this dollar truly does lose some value, you will see a bounce in the Aussie and Kiwi. Not because the Aussie and the Kiwi are doing great on their own. It's just going to be a function of if the dollar goes down, something else has to go up. What is it going to be? I think that is likely what we're going to see. So for me, even though we are seeing the most weakness in the Aussie and Kiwi on the trend, if I'm a believer in that dollar sell-off, I don't really love it. And that's what we're seeing. I mean, look at this. We are seeing this happen in the velocity score. The dollar down here and then rising here. So now if I'm looking at trades here, my favorite trades are going to be dollar, euro, or euro dollar, and also pound dollar. But pound's got a little bit of ground to make up. So at the very beginning of the week, the best trades out there, in my opinion, are going to be the euro and the Swiss franc on the long side against the pound on the short side. Let's go take a look at them. First up for me is going to be euro dollar. All right, here's the daily chart. So again, as I said earlier, this is a counter trend trade. I get it. I understand it. I understand the foolishness of engaging in counter trend trading. I get all that. Trust me, I've been around for 30 years. I've done it all. But as Ankit said, and as I said, there are these little moments during the year where all the pieces line up. It says this is the correct trade to make. It might not be a winning trade, but when you look at all the pieces of economics and everything we look at, this is actually the correct trade to make, in my opinion. So, yes, we know it's a counter trend trade on the daily chart. Yes, we know it's a counter trend trade on the 4-hour chart. But here we're getting some bullish price action here on a 1-hour chart. So look, there's, like I said, you can't lie to yourself. This is counter trend. You have to admit it. And you have to admit that, hey, sometimes these go correct. And the great things about the counter trend trades are they tend to be larger moves than the trending moves. They really can be massive, massive rallies if you get them right. You know, kind of like the bullish and bearish power reversals that we talk about. This is one of those. So for me, I like this thing long. I like it long here. We just broke out of this last little swing high here. So for me, I like it at the first of the week. I just like this one at the first of the week. Let's take a look at dollar Swiss franc. Same thing here. Counter trend trade on the daily. Counter trend trade, not as much on the 4-hour. We are starting to get some better breaks here. But this, again, this one, same thing. It's showing some short-term weakness, and that's what we're calling for, is just this pullback to basically Thursday levels. Thursday levels are down here. So there's like 1.3%. Sorry, Thursday levels are on this one. Sorry. We're already back to Thursday levels on dollar Swiss franc. Let's take a look at euro dollar. Yeah, so we're looking at, up here to 104.80. 104.80, 104.90, somewhere in here, and I think it could be more than that. So again, these are the two trades I like at the first part of next week. Ankit, what do you want to take a look at?
Hey, Rob. Yeah, I'm on the same boat here. Like I said, euro dollar looks the best, and especially you look at the Friday, the Wednesday move is almost recovered most of that move on the downside. So I think that one definitely worth a shot. But then all the dollar crosses I think kind of looks the same. Your Aussie dollar, I think on a 4-hour chart, you can see is sort of making a lower high. 4 hour chart. If you go on, Rob, just you can see that we did sort of have a little bounce. We pull back, and now we're just trying to break on the upside. So finally seeing some better technical. Same thing with the Kiwi dollar is doing the exact same thing. And then again, also the dollar CAD, even though the dollar and the CAD are very, we've seen a big divergence in those currency pairs, but you can see that they're finally giving up. I mean, take a look at that exponential moving average, Rob. Like, they're finally giving up, and the RSI is falling. So it seems like it doesn't matter where you trade. Again, dollar. If the dollar bearish dollar is the call, it doesn't matter what you pair with. Even dollar Swiss franc, that's even worth taking a shot, having a big move here, especially as the Swiss franc is breaking out. I mean, take a look at that one. So yeah, so I think we're seeing a bit of a reset. I mean, this one, Rob, looks interesting to me because this one has given or reclaimed the entire move from that FOMC on Wednesday. So I think this one was also worth a chance as well. So I think either we can trade as a basket where we diversify the risk on other pairs, or we go with the best one. And it seems like this probably looks like the best one here to me. So I think as we go into the next 2 weeks, maybe that's a trade. But just want to keep that in mind is that we are going to be going into this low volatility period. So we're gonna have the Monday is going to be a full day. Maybe that's when we're going to look for opportunities. But we're going to have some things in the middle where I don't recommend making a trade regardless of how conviction wise where you lie. But I think that's really where we are at. But yeah, these are on the Rob. Like I think looks the best here. A short call at the dollar and look for a bit of a rally in everything else against it.
Well, there you have it. Two traders who have been around a long time that have thoroughly been convinced that trend trading is the way to trade are both looking at counter trend trades for this last week of the year. Look, like I said, you take what the market is giving you, and it looks like to me this is the correct trade. It does not mean it's going to be a winning trade. It just means for the data that we're looking at, it's probably the highest opportunity we have this week. So short dollar is really the call for the week. Thank you so much for joining me. Everyone have a very, very Merry Christmas. Next week, we have the same thing happening with New Year on the same day, on the 1st. So we'll do this all again next week, and then we close the books on the year, and we look forward to a great 2025. Thanks, everybody. Goodbye.